At the time of this video production, Redfin has just announced a new housing market report about home pricing, inventory, sales, and much more, including price reductions. I'm passing that info along, and we also have some major news to offer on mortgage rates, which have recently taken a nosedive. As mentioned earlier, we'd like to discuss recent developments in the market and the state of interest rates. So you can check out the recent housing market update announcement from November 10th. And if you don't have the time, just like me, you can keep watching this video. Redfin publishes a weekly housing market update, and this week they had a great first sentence. Inflation has begun to slow, which is already helping bring daily mortgage rates down. If you're not familiar with the CPI report, it was released on Wednesday last week, essentially the inflation report. It reported that inflation came in lower than expected, leading to a decrease in a 10-year U.S. Treasury note yield. The yield on 10-year U.S. Treasury notes fell 33 basis points, as shown below, due to the holiday on Friday and the release of the Consumer Price Index report on Thursday. Interest rates fell across the board, with the 10-year falling 33 basis points to 3.811% and the 30-year falling 60 basis points, respectively from Wednesday to Friday, as reported by the Moore's News Daily. However, it's important to note that because rates increased so much on Thursday, it's going to be interesting to see what they do for the rest of the year. And of course, that impacts our housing market. So home sale prices rose 3.2% on a year-viewer basis during the 4 weeks ending in November, according to Redfin's report. For the 4 weeks ending November 6 across the 400-plus U.S. metros that Redfin tracks, the median sold price was $359,250, up just 3% year-over-year. This is the slowest home price growth since the beginning of this pandemonium. In addition, they report that year-over-year home sales prices have dropped in 6 of the most populous metropolitan regions in the United States as of a week ago. Stockton and its surrounding 4 metropolitan regions saw an increase. Prices fall by 6% yearly in San Francisco and 6% yearly in Lake Count in California, whereas prices remain stable in Pittsburgh, Illinois, 3% in Stockton, and less than 1% year-over-year in Oakland. Pending home sales declined the most year-over-year in Las Vegas, down 55%, followed by Miami, down 49%, and Seattle, down 48%. These cities join San Jose and Pittsburgh on the list of places with at least 500 pending home sales during the period in question, which ends on November 6. Phoenix is down 46%, Riverside, California is down 46%, and Portland is down 47%. The decline in Atlanta was 45%. And California was 57%. Also in Georgia, the median sale price of recently listed homes was $372,475, up 7% year-over-year, but 7% lower than the all-time high of $400,025 seen in May. This is followed by a chart showing the national median sold price. According to Redfin, the median sold price is currently at $359,000. An increase of only 3% from last year. However, in 2020, at the same time last year, home prices were $269,000, a growth of 4% from the previous year. The peak occurred around 2021, with the median sold price reaching $392,000, an increase of 13% from the previous year. This is when we hit the wall. The cutoff year is 2022. Here we have 2021 and 2020 at the bottom. The thing that stands out to me is how little changed from June to roughly November in terms of average rates or average monthly mortgage payments in those years. This year is entirely different because rates have been increasing so much. They started the year at around 3.3% and are now around 6.6%, which is why this has been absolutely skyrocketing right here. Active listings of pending home sales were down 34% on a year-over-year basis, the largest decline since at least January 2015, as far as Redfin's data goes. These things are not entirely new to us, since various channels have been reporting to you guys that pending home sales have been down the most significant decline since around the onset of the pandemic. But this is the first week I've seen that the decrease is that large. The year 2022 is indicated by the black line. Colored line in blue, look, 2019 is right here, and 2021 is right here. Looking at new listings, we see that they are down 17.5% from 2019 levels and are down from 2021 levels as well. An observation I made this morning bears mentioning that the drastic drop in new listings that we experienced from roughly June to roughly the middle of September has not been seen in the intervening months. The demand for the new postings plummeted. New listings are still down from last year, although the annual decline isn't as severe as it was. Let's look at the current postings, which show an increase of 10 from last year but still significantly fewer than in 2019. There are currently around 857,000 homes on the market, when there were around 780,000 in 2021, as reported by Redfin. Something about this trend is that there were roughly 1.2 million in 2019. Redfin's claimed 10% growth year-over-year conflicts with Alto's research and Realtor.com data. They report year-over-year inventory increases from 35% to around 40%, significantly higher than what Redfin reports. This discrepancy is due to the company's sample sizes and periodic, as Redfin looks at the 4-week rolling average, whereas Realtor.com and Altos report weekly changes compared to 1 year ago. So Redfin does a weekly report that says 34% of pending home sales went under contract within the first 2 weeks of being listed, indicating that the house is selling very quickly. And here is a chart showing the months of supply over time over the past couple of years. Currently, there are 3.3 months of supply, which is up by 1.2 months compared to 1 year ago, because in 2021, there was around about 2.5 months of supply. 2 out of every 10 pending home sales have closed in less than a week, which is both good and bad news. The ratio is currently 22% and has hovered around 30% over the past few years. This is because in 2021, it took about 27 days to sell a house, while in 2019, it took about 48 days. Approximately 28 houses were selling above the asking price during this time frame, for a total of approximately 27.8%, a ratio significantly lower than in 2020, when it was just over 30%, and significantly lower than in 2021, when it was over 40%. In addition to all those analytics, I'd like to update you on the current state of price reductions across the country. Altos reports that as of this writing, the share of price drops is approximately 43%, meaning that roughly 4 out of every 10 homes currently on the market have already seen a price drop. So, I guess this video is over. Let us know your thoughts on the subject matter in the comments. Get the conversation going in the comments. Please hit the notification bell and like and subscribe if you enjoyed this video. We at Stockology hope to expand our channel with the help of this. We appreciate you tuning in and hope to have you back for the next episode.